Rates going up even higher? Thank goodness it's National Margarita Day. Stay right there, because when we get back, we're talking about how much waiting could cost you in the long run. Better yet, let's just count how many times I can say margarita.
You were talking about money, right?
Separate yourself widely from the pack moving forward. That's something that you would be willing to have a discussion about.
Because they didn't get it.
They
were
probably
like,
didn't get it. Yeah.
To follow up with your clients, to generate more leads. You know what I mean?
Hello Tuesday and happy National Margarita Day. It's Mark Jones, the Millennial Mortgage Expert, branch manager of Directions Home Loan at Cantera, host of Key Factors podcast, and co-founder of ReviewMyMortgage.com, the largest index of mortgage programs nationally. So I actually going to be in the office all day today, recording a couple of podcasts, providing a pretty educational meeting for my loan officers and a couple of loans in between. So that being said, I want to have you guys close your eyes with me for just a moment as we let the wind blow straight through our hair and we're walking on a sandy beach in Hawaii, and we plant down and start sipping our margarita. Gosh, isn't it nice? Well, back to reality. So we've got some interest rates that are continuing to rise. I'll jump straight into it today. So as we jump into the day's interest rate, and keep in mind that the market was closed yesterday, so we have to look at the day prior to, which would have been Friday. We're going to use a $300,000 price range, which that is actually a little bit lower than the average in San Antonio. And we're going to go with 5% down, purchasing in Texas. And as you can see here, I now have it at 680. Texas is coming up. Our new average credit score for Texas is 680. And I don't know if it has anything to do with all the folks from California coming into Texas, increasing our credit scores. If so, thank you. But don't you California my Texas. As we look at that rate, we're looking at a 30-year fixed is at 4.444%. Reminds me of a Jeff Davis commercial. But I also want to show you guys what it would look like if you were excellent credit. You'd be sitting at a 4.191%. So rates are already in the low fours, and if you are average credit, which I like to quote things based on an average even playing field, you're looking already at about 4.5%. I wanted to show you guys how much waiting could actually cost you in the long run. But before we do, I'll get straight into the article of the day. This was published yesterday. The article is called Mortgage Rates Continue Upward Trend. Here's what higher mortgage rates mean if you're in the market for a home loan. And this article is brought to us by Justin Jaffe. Some closely followed mortgage rates surged today to the highest we've seen since early 2020, including 15-year fixed and 30-year fixed mortgage rates. We also saw a significant rise in the average rate from a 5-1 adjustable rate mortgage. Mortgage rates have been quite low over the last period, making it a good time for prospective home buyers to lock in a fixed rate. But rates are dynamic and are projected to continue to rise. Before you buy a house, remember to consider your personal needs and financial situation and speak with multiple lenders to find the best one for you. It goes on to give us a couple of updates within the different terms of mortgage. So I'll read a couple of them. So we got 30-year fixed mortgage. For 30-year fixed mortgage, the average rate you'll pay is 4.19, which I think is kind of on the money, because the rates that I'm using as an average, if you look here, they're basically quoting it as excellent credit on a 30-year fixed mortgage is sitting at the 4.191, just like they mentioned in this article. So pretty dead on there. It goes on to say mortgage rate trends. While 2022 kicks off low mortgage rates, they have seen an uptick recently. There are two major factors at play here: increasing inflation rates and growing economy. That said, rates can always rise and fall for a variety of reasons. The spread of Omicron, for instance, kept rates relatively low through December and the start of the new year. Overall, rates are expected to go up in 2022, particularly with the Federal Reserve decision to increase interest rates. It continues on and says how to find personalized mortgage rates. You can get a personalized mortgage rate by connecting with your local mortgage broker or using an online calculator. When shopping around for home mortgage rates, consider the goal and current finances. Things that affect what an interest rate you might get on your mortgage include your credit score, down payment, loan to value ratio, and your debt to income ratio. Generally, you'll want a higher credit score, a higher down payment, and a lower DTI and a lower LTV, which is loan to value, to get your lower interest rate. Aside from the mortgage rate, factors including closing costs, fees, discount points, and taxes might also affect the cost of your home. You should speak to several different lenders such as local and national banks, credit unions, and online lenders, and comparison shopping to find the best loan for you. And then it basically goes on to give you a self-diagnosis on what the best loan for you is without knowing who you are. That is probably the only part that I actually disagree with some of these articles when they go out and give a blanket statement of everybody should be putting 20% down and everybody should go with a 15-year mortgage, kind of like the Dave Ramsey philosophy. But I don't think that is a one size fit all when it comes to mortgage and those things in general. But I wanted to show you guys a couple of fun facts. So in addition to Texas's average credit score increasing to now 680, I also found this: the average price of homes in San Antonio skyrockets 19% over the last year. So it is showing that the average price of homes sold in San Antonio is $353,662. So that is the average, not the median. The median comes in just under 300,000, which is why I use that for our rate quotes. But going a bit further, I wanted to show you guys what the cost of waiting to buy. What is that cost? I don't think that we take it seriously because all of a sudden rates jumped up a half a point or more in the last week. Those things are really never foreseen, in my opinion, at least not from a mortgage professional's perspective, because if that was the case, we wouldn't be doing what we're doing. We'd be playing the stock market and shorting stock all day long. So to go a bit further and show you on a granular basis, but at the same time to where you'll understand it, I took 3 different scenarios with the same $300,000 loan amount. And as you can see here, and if you can't see, we have one with 4.5%, one with 5%, and one with 5.5%. They're all 30-year fixed mortgages. And you can see at the bottom that if you are to buy in the current climate with the average credit score of the 680, thus giving you a 4.5 interest rate, you would be looking at a $1,520 mortgage payment. Over the life of the loan, the total interest that you would pay is $247,220. Now, that is over a 30-year span, so I don't want anybody to freak out about that. But you can see here from the actual chart in comparison to these that if you were to wait until rates go up to 5%, your money now buys you monthly $90 less. The payment has gone up to $1,610, and you're now paying $32,547 in interest on top of what you would have paid at a 4.5 rate. Not to mention the amount of equity that you would have lost out on by just owning a property in Texas, with more and more people coming this way. So lastly, I'm showing you here a $300,000 price range at 5.5% at a 30-year fixed mortgage. And no, that is not what rates are currently, guys, but I want to give you, I can't even say it's an extreme. I want to give you a worst case scenario. Let's call it that. At the end of this year, if rates happen to be at the 5.5% and you still have not purchased a home, this is where you would have lost out on. Your payment would have increased $183 to $1,703, and you would have paid an additional $65,992 over the life of the loan. So guys, that is just putting real numbers in your face so that you guys understand that there's never a bad time to purchase a home, but there is a bad time to wait because we do know that rates are going to continue to rise. The Fed has announced that they are increasing interest rates to slow down the rate of inflation. Our economy is doing fantastic, and more people are continuing to move to Texas. So as they say in Texas, shit or get off the pot. No, I kid. But I want you guys to understand that the goal of giving you and providing you this information is to educate you, is to help you make that decision whether or not it is a good or bad or right or wrong time to purchase a home. And for me, I believe it's always the right time. My wife and I are still flipping properties, and we're going to continue to purchase property. I have to say that you can almost never go wrong with property in Texas. It will always rise. It has not gone backwards. And with the rate of people coming this way, it looks like it's getting more and more valuable each day. That was a nice little rhyme there for National Margarita Day. So hope this information goes a little ways with you. If you got something out of this update, please make sure to share, like, subscribe. You never know who needs this information, and you could be that person that provides it to them simply by sharing one of our videos. So you guys, it is National Margarita Day, so go out there and have fun, be productive, but make today count.
You were talking about money margin.
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it.
They
were
probably
like,
didn't
right.
get it. Yeah.
To follow up with your clients to generate more